Smarter Markets is back at the FIA Boca, and I'm joined by Shahrawat, crypto and digital asset structure at Bloomberg. Thanks for joining us, Dushyant.
Thanks a lot, Dave. Thanks for having me.
So just to start us off, could you tell us a little bit about what you do at Bloomberg?
Sure. So I just started at Bloomberg about a month and a half ago, and I work in our market structure team, and I basically look at everything that's happening on the blockchain, crypto, digital assets, decentralized finance, all the wonderful things that are being built on top of it, like stablecoins and tokenization of assets on behalf of the Bloomberg client base, which is, 400,000 terminal users all over the world.
And certainly there's been a lot of conversation around tokenization this week. Is that what brought you down to Boca this year?
Well, actually, I've been coming to FI Boca for over a decade, way before anybody was talking about blockchain. I think 2-3 years ago, I've been looking at the crypto and blockchain space for the last 5 years. I was an investment banker raising capital and advising companies in the crypto space for the last 7 years for Rosenblatt Securities. So I've been in that sector. But I didn't think that we'd be talking about tokenization and stablecoins at the FIA as much as we have been, this year. So I wouldn't say I'm here because I care about the capital markets and want to look at what's going on in that space. But obviously, this year, blockchain as infrastructure and rails on which capital markets can operate has been a big topic area, and that's great part of my interest here.
And with it being such a big part of the conversation this year, what does that tell you about how the state of the use of blockchain and crypto and tokenization has changed over these past 10 years?
Sure. Actually, we need an hour for that. So let me give a framework through which I look at this space, right? Because it's so complex from a technical standpoint, it's easy to get lost. So at a very high level, I'll think of it as 3 different columns. Column 1 is the crypto tokens we all know about, right? So Bitcoin, Ethereum, Solana, and all the hundreds of thousands of meme coins. Think of that as the first category, first column. And if you're an investor, trader, retail, or institutional participant that directly interacts with the token, think of that whole market structure in column 1. That was the first use case of blockchain technology, right? Like last 10, 15 years, it's Bitcoin and all of these tokens that have successfully demonstrated that the underlying blockchain infrastructure works. Column 2 is all the things that are being built on top of blockchain that have nothing to do with tokens or nothing to do with the crypto tokens we're familiar with, right? That's where things like stablecoin comes, which is basically taking fiat currency and putting it on chain. Now, that could be done either if a government does it, that is a CBDC. If a private company does it, then it's a stablecoin, right? That stablecoin could be privately issued like USDC is by Circle or USDT by Tether, or all the private stablecoins out there like Fidelity Investments. I live up in Boston, so Fidelity's down the street from me. They just rolled out the stablecoin. So that's category 2. Including in that is things like tokenization, right? Which is obviously a big theme for the institutional capital market space. Leveraging that infrastructure and technology for derivatives, spot, all of those products and services that currently operate and work well, but they may be potential to do it better on the blockchain. Column 3 is the Wild West of blockchain, which is decentralized finance. That's kind of, that's like 10 years out. That's the experimentation that, think about that as the laboratory where crazy things are happening that might become mainstream. That's a little too much for the institutional, client base here. But I also look at that almost like, it's like I call it DeFi Fridays. Every Friday you spend 20% of your time looking at what's the most extreme use case of blockchain technology. And many of the use cases actually might be outside of our industry. So that's the framework through which I've been looking at it. And I think 10 years is a long period of time, but the last 3 years, there's been dramatic improvements in public perception, understanding of the space, and a recognition that this is not just Bitcoin and Ethereum and Solana we're talking about, but real institutional use cases for this technology in capital markets.
And when you think about its use in institutional level capital markets, what do you think the biggest challenge remaining is?
I think the biggest challenge right now is just the public perception again, like the folks that are here, get it, but 80% of the industry, I would say, doesn't really quite, when you think about, you mentioned stablecoins and tokenization, they immediately think about Bitcoin. and saying, well, Bitcoin is halved, so therefore, what's the big fuss about it, right? And I think you've really got to roll up your sleeves and care to understand the space to recognize that, again, where I started off with, that all that Bitcoin did was demonstrate that the underlying technology, which is a blockchain, actually works. So I think the number one problem is just the lack of understanding and the conflating of concepts. But I think the industry is coming around. The fact that you have got exchanges, you've got regulators, Mike Seelig, the chairman of the CFTC, today Paul Atkins, chairman of the SEC, regulators talking about it. You've got exchange leaders, like we had an exchange leaders panel in the morning, from CME, Terry Duffy talking about it, Nina Friedman. So that gives a lot of people faith and confidence that this technology is for real. And we're beginning to see, real life use cases of infrastructure that operates on traditional rails being ported over into, onto blockchain rails as well. One more framework that I just, give people to understand that's helpful is coming back to basics. You think about what are the 4 basic financial activities that all of us do in our lives. There are 4 basic things. Payments, you got to pay people for things. Lending or borrowing. You've got investing, and trading is one element of that. And 4th is insurance. Those are 4 basic fundamental financial activities. Today, we've seen examples of how blockchain is used for payments, which is stable coins. The investing and trading piece we've seen with what's happening, at this conference. There'll be opportunities, and there are examples, early indications of how blockchain technology can also transform insurance, which is not something that obviously we talk about here. And the 4th leg of stool is lending and borrowing. And that's where staking and lending happen. So basically, the actual activity is not changing, but you're just moving those activities to more efficient rails, which is what all this hullabaloo about blockchain is about.
And a couple things that have come up at the conference in a number of the discussions has been the notion of interoperability and privacy. Where do you think we are on those 2 aspects?
The privacy stuff, look, I mean, I don't think the industry has solved the problem because blockchain inherently is a very transparent, technology. And all transactions, the whole idea of blockchain is everybody can see it. It's like a whiteboard, right? You put it up on a whiteboard, everybody can see it, and therefore nobody can disagree and argue that Dave and Dee agreed to a deal, at FIA. Now it's up on the whiteboard, everybody can see it, right? And obviously in capital markets and all parts of finance, you don't want all your transactions revealed. So I don't think we have fixed that problem, but there are infrastructures like the Canton Network, which is run by Digital Asset, which is a consortium of firms that came together 10 years ago to create that, which is permission blockchain with the privacy, the AML, KYC stuff that we are, used to. So that's an example of an initiative run by the industry that is taking blockchain technology and addressing the privacy issues that you talked about. What was the other thing you asked about?
The interoperability.
Yeah, the interoperability across blockchains, is an issue, but I think over time it's going to be fixed. We had the same issues if you look at wireless technology 15, 20 years ago with wireless phones, right? But I mean, all those teething troubles eventually get addressed by interoperability. 25 years ago when I started covering technology in the space, there was a concept called middleware. So middleware was basically, as it says, middleware, infrastructure technology that basically helped cross over and integrate one platform with another. So I think those are teething troubles that today are big issues, but I think 3 to 5 years out, I think they'll be addressed.
And this week at the conference, were there any ideas that came up that surprised you or you wanted to take away from the conference with you?
Yeah, sure. I mean, I think what I was surprised at was, I had indications of it, but it was good evidence and confirmation that the technology, the underlying blockchain technology is being used in so many ways, from collateral management to efficient, clearing and settlement. I just came out of a panel listening to 24/7, 24/5, trading, which in that session was the president of Circle. So Circle was talking about the fact that bringing lessons from what they've done in stablecoins into capital markets and saying this is reason why blockchain technology can facilitate 24/5, 24/7 at some point, trading, clearing, and settlement. So those are things that are, extending the traditional usage of blockchain infrastructure into things that we may not have thought about a couple of years ago.
And looking ahead to next year, what would you really like the industry to make progress on over this coming year?
Yeah,
for when we're back here
sure,
again?
Dave. So I think 2 fronts. One is seeing the CFTC and the SEC actually execute on their on the agenda that they laid out, which is a very, pro-innovative, pro-innovation, pro-crypto thing. So seeing how that plays out over the next 12 to 18 months. And second, I would say was, the DTCC no action letter, what NASDAQ and New York Stock Exchange are doing in coordination with the DTCC. All of that is going to come to fruition in the next 12 to 18 months. So love to see the progress in that direction. I think the industry is saying the right things. It's a matter of how do we sort of address the teething troubles in that? And hopefully this time next year, there are real proof points that we can point to things that the SEC, CFTC have done that have resulted in net improvements in the sector, and to see if folks like DTCC, the exchanges, basically start using blockchain infrastructure to do some of this tokenization stuff that they are, that they have plans to do.
Well, thanks so much for sitting down with us, Dushyant.
Great. Thanks a lot, Dave.